Welcome to the Cryptocurrency Odyssey Show. The Cryptocurrency Odyssey Show highlights the latest news on cryptocurrency, blockchain technology, disruptive technology, economics, and world events. They interview top thinkers and entrepreneurs in the industry, and they cover topics like Bitcoin, technology developments, investing, trading, and ICOs. As our world keeps getting more and more digital, cryptocurrencies are changing along with it. Okay, audience, here's the host of Cryptocurrency Odyssey, Matt Leach.
Hi, listeners. Welcome back. Today's show is about Terra Luna, and I'm sure you've heard about that by now and what it means to you. We're going to talk about the intricacies of Terra Luna and get us all more educated about this platform for cryptocurrency. My co-host today is Mike Grimes. He'll be helping me educate all of us about that. Hi, Mike.
How are you, Matt?
Doing pretty good. It's good to see you back again.
Yeah, not a great crypto day given what Terra Luna just did.
Mm-hmm. Well, let me get a description of Terra Luna so that listeners will know what we're talking about. The show today is a modified explanation of the current state of Terra Luna. It keeps changing, it seems like, daily, and the crypto industry along with it. So we've adapted and augmented the content because our listeners have asked for more Luna information. Today we'll have a look at how, as a user of Luna, cryptocurrency could be an economic path to freedom for you. And first, a quick review of Luna. Now, Terra is an open source blockchain payment platform for an algorithmic stablecoin. A lot of hard to say there. What are cryptocurrencies that automatically track the price of currencies or other assets? Now, the Terra blockchain entitles users to instantly spend, save, trade, or exchange Terra stablecoins. The Terra protocol creates stablecoins designed to consistently track the price of a fiat currency, which is a government-backed currency such as the US dollar or the euro. It consists of two cryptocurrency tokens, Terra and Luna. Now, Terra, again, is an open source blockchain protocol that underpins algorithmic stablecoins and a network of financial applications. And Terra is one of the two main cryptocurrency tokens under the protocol, the other one being Luna. Terra stablecoins track the price of fiat currencies like the US dollar and euro, while Luna is used for blockchain governance. The Terra protocol maintains the price of the Terra stablecoin by ensuring that supply and demand for it are always balanced. And this is achieved by using Luna as the variable counterweight to the Terra stablecoin. So now that I've gotten through that, let's talk to Mike about what he thinks Terra is going to do and where we're going with it, I guess. What are the lessons we can learn about the collapse of Terra Luna, Mike?
Well, that's the key point, the collapse. Who knows? Who would have thought that the fifth largest cryptocurrency would fail and cause such, if I read it right, about $40 billion worth of losses. But Terra is crumbling. The blockchain project home for the popular algorithmic stablecoin Terra USD, which had recently become the fourth largest stablecoin by market value, but now sits at fifth. That's an interesting point there. There's only 5 of these stablecoins. They were 4, now they're fifth because they've collapsed. As the collapse of the USD repeatedly fails to sustain its $1 peg, and Luna's blockchain native token Luna near zero. Terraform Labs, the tech startup behind the development of Terra, halted the production of new blocks on the network on Thursday to prevent governance attacks following severe Luna inflation and a significantly reduced cost of attack, it said on Twitter. A governance attack became less expensive because the nearly free price of Luna, an attacker could cheaply acquire enough Luna tokens to socially attack the network by forcing a majority vote. Since Terra relies on a derivation of the proof of stake and consensus instead of hardware and electricity as Bitcoin's proof of work, coin ownership equals power. In Bitcoin, the amount of BTC you own doesn't grant you more power on the network. Now, that's a good difference there, POS versus POW. POS is something they created, I think, to create these stable coins because they didn't want to have to do like Bitcoin, where it's a POW, proof of work. You actually performed a solution on the blockchain and were rewarded Bitcoin for that solution and keeps growing the network. The network went live a couple hours later as the software patch was released. It's rapidly evolving space on all fronts, development, investment, and regulatory trading. All the areas surrounding cryptocurrencies, trading, execution, and custody will become more efficient, less expensive, and safer as the government matures and more institutional players are involved. Governments are considering additional rules, regulation, and disclosures for consistent identity collection, reducing illegal activities and tax collection. There's still not a consensus about the best cause or even what it is. Variable alternative currency, store of value, investment, speculative, etc. But that's okay. Ultimately, stakeholders and marketplace will determine the next decade of cryptocurrencies. Still have questions about cryptocurrencies? That's what this show is all about.
Okay, great. Now, the part about it lost its peg, I kind of want to talk about that because I'm not sure that the listeners will understand that. That happens when the currency gets so low that it's actually worth less than the U.S. dollar that it's pegged to, right?
Well,
Is that how that works?
Put some numbers to that. There was about $10 billion worth of Bitcoin backing the Luna coin. And of course, everybody said, well, that'll make it safe. But then when the Luna coin dropped $40 billion, it blew through the collateral backing it and caused it to go to zero. And that's the problem here is this is all new and it's not proof of work. It's all proof of stake. And basically, it's an experiment in the market that failed, and we're all watching it real time.
So, as an experiment, are they going to be able to change any of the, I don't know, numbers or anything like that?
No, I think really what in the final analysis of this is how do you have a stable coin, something like a Luna, buying and creating it, minting it, and burning it to keep your stable coin Terra at $1. That's fine, but who'd have thunk that you have to collateralize at 100%? You had to have 40 billion in Bitcoin to make this transaction work, and they were 25% under capitalized. And it's like any transaction. If it fails, you better have the backing to back the stable coin. And as soon as they figured out they were about 40 billion short, everything started to fall apart.
Okay.
You can't make it, you can't mint it and burn it fast enough if you don't have the assets behind it. And that's what it showed them right there, is just within hours it fell apart because when they did the final analysis, they didn't have assets backing the Terra transaction. Now, I have a personal problem with that because they marketed it as an alternative to cash in the crypto space.
Yes,
you're
I
not getting
remember that.
any returns in the cash return, so you're looking for things that'll do better. Terra was advertising a 20% return in Luna shares. It's a stable coin. I can get 20% versus sitting in a normal banking institution getting 0.5%, 0.05%. So, that's really an investor like me. I'm looking for a better return. I don't want to take a risk on it. I just want a better return. And that looked like a good one. Unfortunately, I didn't play the Terra Luna transaction. which is fortunate for me because I didn't have to deal with a big loss in here.
Right.
But nobody expects to go into a transaction in a safe vehicle and lose their money.
Mm-hmm.
And that's really what's reverberating through the crypto space right now is if it can happen to Terra, what else can it happen to?
Yeah. Do you think that'll last for a long time, or do you think they'll come up with an answer for that?
Well, I think you're going to have to get into the basic definitions of crypto, proof of work, proof of stake. Look hard at how your current your white papers read on your current investments, or really we could look at stable coins to start because there's 4 other stable coins. Could it happen to them?
Mm-hmm.
That would be my question.
I'm sure that's a question that's on a lot of investors' minds right now. I know that the Luna blockchain, Terra blockchain, the Luna coin is being backed by Bitcoin, and here's one of the blockchains. I guess he's a 30-year-old crypto billionaire. His name's Sam Bankman, and he took aim at Bitcoin, the world's largest cryptocurrency, saying it has no future as a payments network in an interview with Financial Times. Bankman is CEO and co-founder of FTX, the second most popular digital asset exchange by trading volume. And he says that the Bitcoin network is not a payment network and it's not a scaling network. He said, arguing that the underlying proof of work system the Bitcoin network uses to verify transactions is incapable of scaling efficiently enough to keep pace with demand. So isn't that kind of what you were saying?
Well, yes and no. That's a different issue altogether. That article related to payment and their payment, like the Lightning network that sits over the top of Bitcoin. Mm-hmm. Bitcoin's not designed for a $2 cup of coffee. But I'll tell that to Costa Rica right now, who is settling all their transactions in Bitcoin, so it can be done. But they have to overlay something like a Lightning network that allows for the smaller transactions into the blockchain. The blockchain's not designed for $2 cups of coffee.
Mm-hmm. Okay. Well, that makes a lot of sense. Just a quick reminder here, audience. You're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM. With your city in there, just type in zeno.fm / in your city, Monday to Friday at 11 a.m. and 4 p.m. And also, for more information, you can call me. That's Matt Leach at 314-781-7612. Again, that's 314-781-7612. Or call our 800 number. It is 877-212-1400. And you can also contact us at our new website at https://ccodweb.us, and that's cc as in Charlie Oscar David web.us. Give it a try. Let us know what you think. You can leave messages and questions there. So, okay, Mike, next question is, we keep coming back to the stable coins, and you were mentioning that there are other stable coins. So how do stable coins work?
Stable coins are digital representations of value in the form of tokens that attemptively maintain a one-to-one parity with a fiat currency like the U.S. dollar or the euro. Tether and U.S. coin lead the market capitalization ranks and are the most popular and widely used stable coins. However, they are issued, minted, and destroyed, burned by centralized entities that also maintain the necessary dollar equivalent reserves to back the coin. Terra's UST, on the other hand, sought to become a stable coin whose minting and burning process were performed programmatically by a computer program, an algorithmic process. Under the hood, Terra's promises that people can exchange $1 UST for $1 worth of Lunar, whose value fluctuates freely according to supply and demand at any given time. If UST breaks its peg to the upside, arbitrageurs can exchange $1 worth of Luna for $1 of UST, capitalizing on the premium with an instant profit. If it breaks to the peg on the downside, traders can exchange $1 UST for $1 worth of Luna, also for an instant profit. If you compare this with Bitcoin, you'll see that Bitcoin is a very volatile cryptocurrency, while stablecoins are not. Bitcoin isn't pegged to any asset, so it fluctuates in value following the conditions of the market. This makes Bitcoin a good crypto asset for speculation. However, people and businesses don't want to deal with BTC due to its volatility, which led to the introduction of stablecoins as a solution. So stablecoins are designed to be stable. They are pegged to either fiat currency, commodity, or cryptocurrencies. Examples are USTD, USTC, TrueUSD, and so on. Also, we have Jaxcoin, which isn't pegged to another asset. Unlike the aforementioned stablecoin, Jackcoin is decentralized and runs on a proof-of-work protocol. The stable value of these coins makes them ideal for payments compared to Bitcoin, which is highly volatile.
Okay. So, the I guess Terra, it's highly volatile too. Now, Do Kwon, the CEO of Terraform Labs, is moving forward with his Terra ecosystem revival plan too, following last week's collapse of the Terra stablecoin peg to US dollars and the subsequent demise of its native token Luna, which plummeted from 87.68 to the current 0002 level, and I think it has gone down a little since then. Kwon announced a collaborative plan of action with the Terra community, and Do Kwon's post on the Terra Agora forum releases a specific short-term timeline for the recovery plan, and with that action, Terraform Labs will lead a governance vote on Wednesday, May 18th. So that's going to be tomorrow. They're going to have a governance vote on the coin, and I don't know. I'm kind of unfamiliar with governance votes. Are you familiar with those at all, or?
Well, that's what they're worried about. We said earlier, Bitcoin is a proof of work transaction, and you could own 1 billion Bitcoin, and it's not going to give you any more than a vote. There's you're not. The more you own doesn't create the vote that you own. In a proof of stake transaction like these stable coins that are using proof of stake, you can buy Luna for almost nothing right now. So you could buy 10 billion Luna for $100 probably, and what that means is you have governance with that vote. You have 10 billion votes. So what they're saying is in these proof of stake transactions, if the underlying asset drops to zero, somebody could come in and buy a gazillion of them and control the vote and vote to vote to terminate the transaction. Well, that's why they shut it down. They didn't want to give somebody the right to vote them out, this chairman of this thing. But this guy who is experimenting with these cryptocurrencies that put himself in the position to look like a stable coin with a good, smart transaction to buy and sell an asset class to support it, should have understood that if I'm going to back this thing, I better back it for what it's worth. I better have 40 billion in assets behind it, not 10 billion for an asset class that's got $40 billion worth of money on it. So when they blew through his 10 billion by this thing failing, it was just a death spiral. He didn't have the money to back. Show me the money, and he didn't have it.
He didn't have it, yeah. So now that he's trying to bring it back, does that mean that he has the money now? Has he got the financial backing?
Well, he had to sell all of his Bitcoin, $10 billion worth of Bitcoin, and Bitcoin hardly blipped. That was kind of interesting. Two, he's got to find $40 billion. And I don't know if you've got it in your back pocket. That's a big dollar amount
That's a chunk.
to get people to invest in something that just cost $40 billion worth of losses.
Yeah.
No, I think this is a dead transaction because who's going to invest in something that just lost $40 billion to save it?
That's a good point.
I
Yeah.
just think that it's such a major loss. And these losses were last week, right?
Yes.
It's going to take time for this thing to sift into the market. But, anybody that owned this because they thought it was safe and they'd get a better return is going, what happened?
Yeah. Pretty much.
What happened?
Yeah.
What do you mean my account's zero? And, then that's the thing lawsuits are made out of. This guy who owns this thing, who's experimenting with $50 billion and only has $10 billion back in it, is going to realize if you got a $50 billion transaction, you should have, how'd you get $50 billion? Where's the other $40 billion? If you, so there's going to be a lot of questions. This poor guy that created this has got some big people out there with big losses that have a lot of very good attorneys that are going to be asking questions here.
Yeah.
And
no doubt.
We'll see who's got the beef.
Yeah. Yeah. Well, on the other hand, Elon says that he may not take Twitter, so he's going to have 40 billion laying around.
Yeah, that's an interesting point. When Twitter becomes all bots, is it worth 40 billion?
Yeah.
There's a lot of 40 billion. We know Luna's not worth 40 billion.
Yeah.
So maybe Twitter isn't either.
Yeah. Yeah. Oh, yeah. Wow. That's.
And Elon's probably looking at Luna going, could that happen to me?
Yeah. Yeah. They could be. A lot of people.
I'm sure those guys are looking at going, now wait a minute. How did that happen to Luna? Why can't, if I buy Twitter and it's full of bots and there's no people, it's just computers, what's it worth?
Mm-hmm.
And he pulls back, and I'll bet Luna caused him to say, hey, wait a minute, I better check to see what I'm buying here.
Good point. Yeah. Yeah.
I know that's how it would affect me.
So, since we're asking, could that happen to me? I guess we could ask what are stable coins actually used for then?
And see, that's under the hood here. Stable coins are a safe place to park your dollars. Remember, we did a whole show on DeFi.
Right.
The whole thing is take your money, put it in a stable coin, put it in a DeFi wallet as collateral. It's safe. It isn't going to go anywhere. And then do transactions against it to increase your yield, like a yield farming transaction.
Mm-hmm.
That's what stable coins are for. But it's kind of like that's what they're for and that's what they were doing. And then all of a sudden, one of them caved. One
Right.
of them, did a deep six on us. And people are stepping back and going, are these things safe?
Are the stable coins in general safe?
Are they safe? Are they backed? But it's an easy transaction, I think, because if you go into the USDC, which is backed by US dollar investments, you can easily see their portfolio and see if they're worth enough to peg the coin. I think that's what happened here. It was a computer transaction, and they didn't realize that it was not backed properly. And then when the run came on Terra shares, boom, it just fell apart because there wasn't assets backing it.
That makes a lot of sense. Yeah. The assets have to be there, and with the speed of computer, it doesn't take long to have that crash problem. So now, we keep getting Bitcoin coming up all the time about that. You mentioned that he had to sell, Quan had to sell all his Bitcoin, and it didn't even raise a blip on Bitcoin.
$50 billion margin call, and he had $10 billion worth of Bitcoin to back it.
Mm-hmm.
That's a highly leveraged transaction. Nobody understood it was going to be that highly leveraged on a stable coin. That's why, there's a lot of questions to be answered out here.
Okay. Well, what does Bitcoin have to do with all of it then?
Well, I think it's interesting. What did he use for collateral? Bitcoin.
Mm-hmm. Yes.
The so-called volatile asset class. Well, it isn't. It's a 12-year-old network that's had $13.1 trillion worth of transactions last year, 20% more than Visa. And, so what do you go to when you need collateral on your stable coin? Bitcoin. He just didn't have $50 billion worth of Bitcoin. Had he had $50 billion worth of Bitcoin, which, by the way, if he had Luna worth $125, which is worth 0.000002 right now, why didn't that create $50 billion worth of Bitcoin that he could buy to back the coin? That's something's wrong here. I think that guy has got a bunch of money sitting someplace because he had it in Luna shares, but then at the same time, when Luna shares crashed from $1.25 or $125 to 0.002, that value disappears.
Right.
So that's really what I think's happened here. He may have been backed by Luna/Bitcoin. He didn't have enough Bitcoin, and the Luna became worthless. And all of a sudden, his Bitcoin is dipping. He doesn't have anything to peg it to $1. And that's kind of Bitcoin. I think is interesting though. Here's a nice little asset class that got hit, was going up because he was buying $10 billion worth of Bitcoin. Remember, there's only 21 million coins in Bitcoin.
Right.
It's a thinly traded asset class. He buys 10 billion and the thing's going up. Well, when this thing fails, he's got to sell it. And this thing dropped from 42 maybe to 25 on the sell side, and now it's inching back up because it's got assets behind it. It's a more solid. It may be volatile, but it's got the network behind it, the transactions behind it, the El Salvadors of the world who just had 44 other countries. I don't know if you've looked at that El Salvador, but this is really what Bitcoin might end up being. It's a form of asset payment schedule for underdeveloped nations. And, so what? I don't care what it does. I just like the fact it goes up and down so I can trade it.
Yeah, there you go.
So, but I don't think, if anything, it showed how strong Bitcoin is in this transaction. But the downside of it is there wasn't enough collateral to play the game that they were playing.
Okay, so he, for what I'm getting here, is that he needs to get 40 or 50 billion dollars to back Terra Luna.
Yeah,
in Bitcoin.
Well, that would be nice, but there was some thought that, well, wait a minute, Bitcoin's backing this. This is actually a way to play Bitcoin. Well, it isn't. Bitcoin was being used as collateral and 75% short on what was needed to back this transaction.
Mm-hmm.
They only had 10. They needed 50.
Okay, so is he? Will he be able to get that 50? I guess that's what I'm asking.
Well, we mentioned that before. If you just dealt the market with a $40 billion loss and everybody's out there trying to figure out how to get their money back, are you going to be able to raise $40 billion? You're a pretty good salesman if you can say, well, I lost it once, but I won't lose it this time.
Yeah.
And that's why the financial money will move away from them.
Yeah, that's true. People are going to be feeling a little burned, I'm sure.
I'm sure that will happen.
And so to get that money, it's going to take a lot of talking. And I wonder how much that has set back the cryptocurrency plans of everybody. I guess Bitcoin is on the rise again.
Well, it's up 5% today, but it's come down from 42 down to 30, so to speak. But when you buy when you buy a thinly traded asset class, it pushes it up. When you sell a thinly traded asset, there's not a lot of buyers and sellers. They just sell into it. It pushes it down. Mm-hmm. But if you're a Bitcoin buyer, it's a good time to look at Bitcoin because it's a lot cheaper than it was over, a lot cheaper than it was, say, a month ago. So, it's a good time to buy Bitcoin.
It is a good time to buy, and I guess people are getting the word because it's up 5%, mm-hmm. And I'd like to talk some more about that, but we're coming up on break time here, and want to let everybody know that we're going to have our advertisers coming on. Stick around, listen to the advertisers. Hopefully you'll see something there that you need. And so we will be back in about 5 minutes or so with more of the cryptocurrency audio.
Consultants is a 10-year-old company focusing on middle to large commercial accounts. CEC offers these companies services by lowering their electric and natural gas rates. They don't charge for this service, and they've got over 9,500 happy clients with over 1 billion kilowatt therms under contract. What makes them different is their reverse auction. CEC offers a way to have available suppliers in 17 states bid openly for energy business. Why, their mission is clear. Bring their clients the low bid for their energy consumption. In fact, because of their competitive auctions, energy consumers would be well advised to consult with CEC first. Why pay more for the exact same power? For more information, contact Mike Grimes, CEO of Commercial Energy Consultants at 1-877-212-1400. That's 877-212-1400.
Hey, listeners, saying thanks to your customers is nice and polite, but expressing your gratitude in memorable and ongoing ways can boost your business. At Promo Experts LLC, we exceed our customers' expectations. For over 20 years, our product knowledge and experience has helped them with their marketing initiatives and trade show graphics. We are happy to put that experience to work for you. Quality products, great customer service, and prices are our #1 priority. We work with you to find unique, creative, and new ideas that fit your image and expectations, helping you build strong relationships with your customers. When you select Promo Experts as your marketing partner, we help you to see more than the big picture. For more information about this exciting opportunity, contact Diane Carson, President, at 636-458-5241. That's 636-458-5241. Let Promo Experts help you to move your business brand beyond the bland.
Attention! Here are 5 things that you can do to avoid coronavirus scams based on the Federal Trade Commission guidelines. Number 1, do not respond to text messages, emails, or calls about checks from the government. The government never sends emails requiring that you do anything. Number 2, ignore online offers for vaccinations and home test kits. Number 3, hang up on robocalls. Scammers are using illegal robocalls to pitch everything from low-priced health insurance to work-at-home schemes. Number 4, watch for emails claiming to be from the CDC or the WHO. Use sites like coronavirus.gov or usa.gov/coronavirus to get the latest information, and don't click on links from sources that you don't know. Number 5, do your homework when it comes to donations. Never donate in cash, by gift card, or by wiring money. For more information to help you be prepared, contact Tony Zifilopoulos. He's a 25-year IT professional with the last 6 years specializing in cybersecurity. Tony is a certified information specialist auditor, and he will review your cybersecurity. Tony can be reached at 314-504-3974. That's 314-504-3974. And email TonyZ@fixvirus.com. His website is www.fixvirus.com.
Have you always wanted to write your own book but don't know where to start? Publishing Concepts, a publishing company located right here in St. Louis, offers everything from consulting, book printing, copyrights, ISBNs and barcodes, print book layout, ebook and iBook layout, graphic design, cover design, ghostwriting, typing and editing, distribution, marketing, and more for an affordable price. Visit PublishingConceptsLLC.com or just Google Publishing Concepts to get started today, or call 314-781-8880. That's 314-781-8880. Publishing Concepts. We help you sell more books.
Hello, audience. You're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, and nationwide on Zeno FM / with your city on Monday to Friday at 11 a.m. and 4 p.m. Now, for more information, call me. That's Matt Leach at 314-781-7612. And you can also call our 800 number at 877-212-1400. 212-1400, and you can contact us on our new website at https://ccodweb.us, and leave us a message there. Now, we're back with Mike Grimes, and want to still talk about stable coins and bitcoins and all those neat coins. Now, we've been talking a lot about Terra and Luna, and the little bit of little bit of implosion. It was a big implosion, actually. So, is there something that we left out about how Terra imploded that we haven't already talked about?
Well, as UST became just functionally how it happened, the UST began losing its peg to the downside. That's the Terra. Traders sought to exit by redeeming each of their UST for $1 worth of Luna. However, given the fast pace of devaluation, a massive amount of UST tried exiting more than what Terra was able to exchange for Luna. That stretched out on a chain swap spread of about 40% and put extra pressure on Luna, sending it south sharply. The token then went down into that death spiral.
Okay. Now, that death spiral you don't hear too much about in the cryptocurrency area, or we haven't. I don't know, has there been any other death spirals from that?
Well, I'm sure in some of the smaller ones that are undercapitalized. This was just happened to be a big one that was undercapitalized.
Okay.
Causing a death spiral.
Okay, so the stable coins are generally minted in exchange for fiat currency that an issuer receives from a user or third party. And so to maintain a stable value relative to fiat currency, lots of stable coins offer a promise or expectation that the coin can be redeemed at par upon request. These stable coins are also advertised as being supported or backed by a variety of reserve assets. And however, I guess there's no standards regarding the composition of reserve assets, and I suppose that will be coming, because I think that more people will be wanting more regulation on cryptocurrency now because of this crash. And does that mean like the Fed would get involved, or?
Well, that's the worry, is the Fed will use this as the reason to get involved. The massive losses in a week and the stable coin that imploded, and you can just see that the regulators, if they needed a reason, this would be it to come in and say, hey, what happened? And but that's really what we're trying to say is, if you are going to invest in something, Tether is one of the other stable coins, has an interesting background with the U.S. government, but the problem with that stable coin is they won't tell you what's behind it. They won't disclose it. Now, if you're going to be in Tether in a stable coin to get better returns, and that coin will not disclose what is backing the coin, to me, that's a red flag that you maybe shouldn't use Tether. Now, you take the other one, which is the USDC coin. It's backed by U.S. assets and fully disclosed as such.
Mm-hmm.
So you can look in there and add it up, and if there's $50 billion sitting there and there's a $50 billion valuation to your stable coin, and it's backing the $1 peg, that's the type of thing that's going to come up here now. Is number one, are stable coins worth it if they have that kind of risk associated to it? Number one. Number two, if the ones that are out there, if they're not going to disclose what they own, the same thing could happen. They could own zero, and you're thinking they own. So you're going to go to the stable coins that have a backing of an asset class that is fully disclosed, and you understand what it is, and it equals what the risk is. Mm-hmm. Let's say 100% collateralized. But that's what I think is going to happen because of something like this.
Mm-hmm. Now, are there stable coins that are backed by, like, the euro, for instance? I hear about all the dollar coins, but I'm not hearing anything about the euro or any of the other major currencies. fiat currencies.
Well, that Jack one that we mentioned is backed by the yen. So I'm sure the countries, the El Salvadors of the world, if they're going to put out a stable coin, it's going to be backed by an asset class that they're comfortable with.
Yeah.
But I don't really think it matters. I think it's the capitalization of the stable coin. What is behind it? There wasn't enough assets behind a Terra, and there was a run on it. But in a Tether, what is behind it? They got to disclose that, or they're not going to. People are going to take it out and put it in one that is disclosed.
Now, when you say they have to disclose that, are they disclosing that in the white paper, or where do they do that?
Well, that's the one that you can't buy Tether in the United States because they got sideways with the U.S. government. It's a foreign transaction, but I'm sure they're just sideways with the regulators that they say we're not going to tell you, and we're stationed overseas, so you can't force us to do it.
Right.
But Tether, that bothers me personally because if they won't disclose what's backing the coin, how do I feel comfortable using them as a stable coin to use as collateral to do yield farming with?
Mm-hmm.
You got to have some trust with the asset class that you're using, and I'll tell you,
Yeah.
a lot of people were suggesting this Terra coin because it was a 20% return. I just got lucky that I was transferring assets around. My assets didn't get there in time to put the Terra transaction out,
Right.
which saved me a 100% loser.
Yeah.
Kind of interesting.
Yeah. My Terra is way down there this morning too, and I thought I was going to make some money, but it seems to be climbing back up. It climbs up and then it goes right back down again.
Well, that's a problem with a real big loss is there are always going to be people selling it to get their money back.
Mm-hmm.
So you can't see a real big run back up because somebody will take that run because they lost all the money.
Yeah.
You didn't lose any money. You just got into it low and you're trying to make money with it. But it's going to be a tough one to come back up because there's $40 billion in losses.
Yeah. Yeah.
There's blood on the streets, so to speak.
Pretty much.
Yeah.
Pretty much. Now, with all the talk about cryptocurrency and Terra Luna and the pegging and all that stuff, should we remember and react to this whole cryptocurrency thing just like it's an experiment?
Well, in short, it can be argued that a lesson learned from this is alternative crypto projects, altcoins, are but an experiment, while Bitcoin is the only tried and tested peer-to-peer digital money. Bitcoin was born out of the ideals of the cyberpunks, a group of early cryptographers with a shared vision that they got together to explore what privacy could mean in the then upcoming digital world, especially as it relates to money. The cyberpunk movement was spun out, for the most part, of a work of Dr. David Chaum, a cryptography pioneer that brought the mathematical technology out of the hands of the government bureaucrats into the realm of public knowledge. His explorations kickstarted an entire line of work dedicated to finding how society could port peer-to-peer money, cash, to a digitalized economy. With that goal in mind, these mathematicians began crafting what a solution would look like through research and experimentation. Decades later, Satoshi Nakamoto would put it all together and add their own spin to arrive at Bitcoin, the first and only decentralized and trustless form of digital. As Bitcoin grew in popularity, alternative forms of what came to be known as a cryptocurrency, a currency that exists into the digital realm through a usage of cryptography, started to be created. While these coins initially were born to compete with Bitcoin, a whole new slew of products later began to emerge with different values and propositions while putting their own spin to the blockchain. Consensus and cryptography that made Bitcoin work. Nakamoto designed the Bitcoin protocol to leverage POW, a consensus mechanism that relies on computing power and free competition to mint new BTC, Bitcoin, on the Bitcoin's blockchain. The Bitcoin mining race, as it's known, comprises thousands of miners scattered around the world with a single objective: find the next valid block and receive Bitcoin as a reward. The altcoins, however, have mostly drifted away from POW in favor of the novel consensus mechanisms like POS. The most popular alternative, POS, allows participants to lock their holdings of the given project native token to become the block's creator instead of letting them compete with mining hardware and electricity to mine new coins.
Now, POW, of course, is proof of work, and POS is proof of stake. And, to become a useful means of payment, I guess a stable coin must also be readily transferable with a reliable and accurate mechanism for transferring ownership. And stable coin arrangements typically facilitate the transfer of coins between or among users of the stable coin arrangement. They use issuers and other participants to record the transfer either on the books of the wallet provider for transactions between users of the same wallet provider, or on the distributed ledger for transactions involving users of different wallets. And so that by itself, I guess, can get pretty complicated in some areas. So I guess we could talk about that on a later show. So right now, hi, listeners. If you're just now joining us, you're listening to the Cryptocurrency Odyssey show, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM /Your City. And that'll be Monday to Friday at 11 a.m. and 4 p.m. For more information, of course, you can call me at 314-781-7612, and you can call our 800 number at 877-212-1400. And again, you can visit our website at ccodweb.us and leave us a message there, and we'll get right back to you. Now, our discussion today is a beginning course for people that want to be educated in the world of cryptocurrency, and we learned a lot this week about cryptocurrency and stable coins and pegs and things like that. So let's continue talking about the discussion of Terra Luna and stable coins. And my big thing right now is I'm confused. Now, what can we do to understand Terra Luna and stable coins in general? How can we understand them more?
Terra is a payment system that resides and is built upon a blockchain. It was developed by South Korean-based Terraform Labs, which was founded in 2018 by Du Wan and Daniel Shin. Du Wan was formerly employed by Microsoft and Apple and founded a startup, Anphi, which offered decentralized wireless mesh network solutions. Shin is the founder and CEO of the Asian payment company Chai, a Terra partner, and co-founder of Korean e-commerce firm Trom, also known as Ticket Monster. The business rationale by developing Terra is outlined in a white paper from April of 2019 that lists Du Quan as one of the four co-authors. The paper proposes a cryptocurrency named Terra that is price stable and growth driven, based on the view that the stable currency combines the best features of fiat currencies and Bitcoin. The successful new digital currency needs to maximize adoption to become useful as a medium of exchange. The paper noted that there is a demand for a decentralized price stable money protocol in both fiat and blockchain economies, such as the protocol should be used best, should be the best case for other cryptocurrencies. I go back to that, Matt. I think their head was in the right place, but when there's a need for these stable coins to replace the low asset earning assets that you have in fiat currency. So, that's why these things have been created. Nobody's paying, the banks aren't paying anything on your money sitting around. So they want to go to some place they can earn more, but they don't want to go to an asset class that's so volatile as a straight Bitcoin investment.
Yeah.
So you can see why it happened. I just question whether they were able to collateralize it correctly, because it's obvious to me, being from the financial world, you can't have $50 billion worth of an asset class only backed by $10 billion worth of assets.
Yeah, and that's where the regulators are getting increasingly worried about stable coins after the collapse of cryptocurrency venture Terra, and this is according to CNBC. Terra USD, an algorithmic stable coin that's meant to be pegged 1-to-1 with the U.S. dollar, has erased much of its value this week after a stunning run on the bank that saw billions of dollars suddenly evaporate from its market value. Also known as UST, the cryptocurrency operated using a complex mechanism of code combined with a floating token called Luna to balance supply and demand and stabilize prices. And we've already talked about all this. But the stabilization of the prices didn't work so well as a multi-billion-dollar pile of Bitcoin. Tether, the world's largest or biggest stable coin, also slipped below its intended $1 for several hours on Thursday, fueling fears of possible contagion from the fallout of UST depegging. Unlike UST, Tether is supposed to be backed by sufficient assets held in reserve, and U.S. Treasury Secretary Janet Yellen directly addressed the issue of both UST and other breaking the buck this week. and Tether breaking the buck this week, sorry. It's a congressional hearing. In a congressional hearing, Yellen said such assets don't currently pose a systemic risk to financial stability, but suggested they eventually could. So I guess the regulators are planning on getting involved, and that will change the game, I suppose. I mean, how could that change the game? You see,
No, it seems to me the regulators are looking for a reason to regulate cryptocurrencies, and you lose 40 billion in a week, and that's a big red flag that's going to allow them to walk in and say, "Hey, what happened?" You know, and ours. Do they need to be in a decentralized Bitcoin environment? That's the whole purpose of Bitcoin, is to operate a payment schedule outside the confines of a restrictive fiat currency that is down 8% due to inflation this year. I mean, there's many reasons why in 2000 whatever this became an asset class, but to stop it now because of the action of a couple guys in Taiwan that were undercapitalized on their effort of a stablecoin, I see where this might cause some regulation, but it won't stop Bitcoin for what Bitcoin is.
It won't stop it. What kind of regulation you think they'll come out with?
Well, I mean, an obvious regulation would be if you're going to have a $40 billion coin, or pegged to $1, you got to have it backed with $40 billion worth of assets. You can't stake a coin that's worth $40 billion with $10 billion worth of assets. And it was obviously proved here. They blew through their collateral. The banks are well versed on it. If you ever borrowed money for a bank, they want more collateral than what your loan is.
Oh, definitely, yeah.
Well, this was a case where they did collateral of 25% of what their asset class backing was. And, it doesn't take a lot of financial brain waves to figure out it was undercapitalized, and it caused a run, and instead of the system working, it became a death spiral. Which your point is valid. We don't like to use the word death spiral in talking about your asset classes.
Yeah, true.
And that's why they've got to fix this. And if it takes regulation to fix it, maybe so be it.
So they ran out of money and couldn't back the value. So is there a standard way of how the value of stable coins is calculated? Or
yeah, I think we could look at that, because the primary value of stablecoins is derived by the stability of the price peg, theoretically bypassing the volatility typical of cryptocurrencies. The Terra protocol attempts to maintain the price of Terra stablecoin by ensuring that the supply and demand of it are always balanced by employing arbitrage. Luna is a variable counterweight to the Terra stablecoin and absorbs its volatility. To understand how Terra works, envision the entire Terra economy to consist of a Terra pool and a Luna pool. They're used to adjust the price via incentives and network participants. Terra, there are stablecoins that track, these are the stablecoins that track the price of the fiat currencies and are named after them. For instance, the base Terra stablecoin tracks the price of international money funds drawing special rights, and it's named Terra SDR or SDT. Other Terra stablecoin denominations include Terra USD, which tracks the US dollar, and Terra KRD, which tracks the Southern Korean won. Investors mint new Terra by burning Luna. Remember, that's the balance here. You burn one and you create the other, and that creates the balance to have the stable coin.
Mm-hmm.
Doesn't take a lot of rocket science to figure out that could work. It's kind of ingenious to see that it would work, but it's got to be backed equally by an asset class of what you're projecting your Luna to be worth, or your Luna Terra transaction to be worth. Used for governance and mining, Luna is Terra's protocol staking token that absorbs the price volatility of Terra stablecoin. That didn't work. Users stake Luna to Terra's blockchain called validators, who record and verify transactions on the blockchain and receive rewards from transactions fees as compensation. As usage of Terra grows, Luna's worth increases as well. But that didn't work either. It did get up, but then it had its spiral down.
Well, I was reading about the Luna coin, and they said that they were going to start burning some of the coin, and I think that it was like millions of coins is what they were talking about.
The problem is the coins are worthless. You can burn them, but there's no value to them.
Okay, yeah.
So if they're worth $125 and you burn them, you get the $125. So that burning doesn't work if the asset class is zero.
Right. If there's no value to it, it doesn't really matter much. So right now, audience, we're coming to the end of our allotted time. So I'd like to talk to you about our tip of the day. Today is make a target for profits and losses. The simple yet tough thing we need to know is when to get out of the trade, whether we're on profit or loss of Bitcoin or any other cryptocurrency. So it's important to set a stop loss level, which can help in cutting your losses. This is one of the traits that all investors really have to have. It's also the same case for profits. Don't be greedy. Set a level for profits so that things will stay right. And remember that when you get into the cryptocurrency market, as I'm sure you will someday, if you're listening to this show, that's kind of what we do. Now, I wanted to talk about proof of stake and proof of work blockchains affecting the Terra Luna token, but it looks like we are running right out of
You'll have to come back
info.
next week.
And you'll have to come back to get to the answer for this, and we'll also have a new show next week. So mark us down on your calendar. Remember to come on by, and don't take any wooden crypto.
Welcome to